We have Mayuresh Joshi to make sense of what's happening in the markets. He's, of course, from Angel Broking. Mayuresh, a fresh spurt of selling. Global markets have been weak. Can you take us through what's triggered this fresh bout of selling right now?
Afternoon, Mini. I think it's generally the global weakness and the global nervousness is emanating into our markets coming down as well. So clearly, I think the nervousness which started from China is now seeping into other global markets as well, and that is probably taking a toll on our markets as well.
Okay, bank stocks are really being singled out for the worst kind of selling. The Punjab National Bank, Bank of Baroda, Yes Bank, Axis Bank. What are you making of the slide over here?
So we always resisted many from the public sector side. So private side has also seen equal amount of carnage happening in terms of how the stock prices have panned out. So the bias now obviously remains with the private sector guys based on all the parameters, based on capital adequacy, asset quality, how the return ratios would pan out, their branch network and so on and so forth. So in my opinion, I think the safer bet within the banking pack still remains with the private sector.
Hold on, Mayuresh, we also have Abhijit, who's a technical chartist, joining us. Abhijit, 166 points down. So we are back above the 7,800 level, but the last low was 77.91 on the 26th of August. We've given up pretty much all the gains from that pullback. How are you reading today's this fresh bout of weakness as a chartist?
Well, hi, afternoon. Well, this is essentially the follow-through selling that we saw the first half of last week's trade. What is essentially doing after that big 200-point gap down that we saw last Monday, kind of the bounce back was fairly evident from the fact that the short would be making some decent amount of money, so they would run to cover their shorts. But net what has done is the medium, the long-term charts have been damaged fairly well. It has failed to stay above that psychological 8K mark, and as long as it fails to go above that 8K and sustain above that, this kind of selling is likely to stay. The industry probably will eye the last swing low that we have close to 7667 in the Nifty spot. My sense of retest is very much on the cards, but the fact is, can we break it and move further down? Look at the long-term chart, the possibility is fairly high.
I want to ask you about that, but Mayuresh, just to take a point from what Abhijit said, you know, when we started recovering last week, most people believed that the worst is over and we reached some kind of an interim bottom. From the looks of it, as a chartist, he's really saying that this might not be, this might be a follow-on selling. Could it be a follow-on selling, given that we've been light on positions? What are you reading?
This is, in my opinion, and again, the kind of data that comes out from China would have an overhang on the markets. What Fed does will also have an overhang on the markets over the next few months. So I think generally the global demand tapering off, with crude sliding down, yes, it is beneficial for India in a certain aspect, but again, it reduces the purchasing power for a lot of these oil-producing nations. So you will have global demand tapering off if this persists over the next few months. And that is probably creating some amount of nervousness that we see. So clearly, I think very difficult to predict when and how the bottom will be formed. But the nervousness and the softness in the markets, in my opinion, would continue. But again, I think such soft falls, if we witness that in a given day, I think would become an opportunity to at least start chipping into the markets on a gradual basis.
Okay, Abhijit, the bank stocks have been singled out. We just spoke to Mayuresh about it and Ambarish before that. As a chartist, can you take us through what you say about Punjab National Bank, Bank of Baroda, Axis Bank? What are you making of it?
Well, the bank Nifty is playing its part fairly well in this sell-off, and that index too have moved into an intermediate and long-term downtrend. So, and we tend to see this participation from the banking stock very, obvious from the pack to come. But the fact is, erstwhile, if I look about how the banks have played out in the earlier sell-offs, we did see some amount of pockets of strength, especially in the private sector banks. This time it's slightly different because we see sell-off across the board, and you see the best of the banks, the best of the banking charts, like an HDFC Bank down over 2.5% for the day's trade. So I think it's a sector-wide sell-off that we have seen so far. Bank Nifty and the banking stocks we play its part. Coming to PNB that you mentioned some time back is, I think, coming close to its support of 130. That's where we probably bounced back, I think, 4-5 times now in the past. So that's one support to keep a watch on. But I sense that if market decides to retest its previous lows, then these banking stocks also would be heading further down. The medium charts are fairly weak from a valuation, from a long-term trader investor point of view. They are reaching a zone where it will start looking really attractive.
You know, Mayuresh, it's been a vicious month, August, for global markets across, be it Asia, emerging markets, Europe. It's been a terrible month. Is there more to come, given the fact that in September you've got such big news items, including the Fed meet? You know, Mayuresh, how are you calling it, and what are you telling your clients right now? That hang on to the edge of your seats?
So clearly, I think more selling into the markets, as I said, is not ruled out. And clearly, I think the markets are trying to factor in the kind of scenario we've seen pan out across China and the emerging currencies, that the Fed might probably start increasing the rates from the December policy. But again, I think that is largely factored in. What goes on from here would be further data points actually coming down on a worse scale from China, from Europe, because American data points are holding up pretty well. So I think it's a mixed kind of a bag that we are witnessing. One end of the world probably slowing down, the other end of the world, the demand expected to stabilize and pick up. So I think in this kind of a scenario, I think further weakness not ruled out. Some of the 4-5% correction is where we feel that the valuations will start being extremely attractive on the Nifty if it corrects for global reasons. But otherwise, I think, as I mentioned earlier, I think a part allocation, at least of incremental money, should start getting into the market.
What we are seeing this time around is the selling is more, the big caps which are selling more than the mid caps. Abhijit, I'm going to ask you, you know, we are flirting around with the 7,800 mark. We've broken that 1 or 2 times in the last couple of minutes. What are the next levels on the bottom, the support levels that you're watching out for right now?
Well, in this kind of a market environment, looking at levels, you know, breaking for a minute will not suffice to the kind of analysis, the kind of movement. We have to step back a little and look that these kind of sell-offs are not happening from a short-term point of view. The market is actually correcting a longer time frame. So when I move back and look at the longer time frame charts, the kind of levels that open up once the current lows of 76.67, that is 76.50 is broken, the immediate level that comes close to is the range of 74.75 for the Nifty spot. And that's where it had actually managed to make a nice base in the month of July last year. So that's the kind of immediate level that one should keep an eye for, in the range of 74.75. Not to mention that the entire street will be looking at the recent lows, and that can lead to a little, you know, once it's broken, will lead to some amount of follow-through movement towards this one.
Right. Abhijit and Mayuresh, stay with us. You're also being joined by Brenda Kelly from the London Capital Group. Brenda, thanks so much for joining us. European markets, weakening and extending that August sell-off. What's been the trigger outside what we've seen from China? Is that factor really playing hard on the markets right now?
I think there has been a sincere amount of volatility in these markets. So I think there's a lot of unwinding of positions that we've been seeing. And of course, the Chinese data has not necessarily helped, and that is really driving the FTSE lower, and a lot of the mining stocks underwater once again. But also European PMIs, with the notable exception, I suppose, of Germany, which barely beat its expectation, but they have all been weaker. And again, I suppose we have seen Greece surge back from its 31 print last month in July, but nevertheless still very much weaker than expected. And even Ireland, which has been quite a powerhouse when it comes to manufacturing and services output over the last number of years, even since coming out of its bailout, is failing to meet expectations as well. So we're not expecting to see anything good from the UK, which is due to be released in a couple of minutes' time as well.
Brenda, tell me, after the kind of sell-off that we saw in the last week, what's the general sense that could it be worse? Because there's so many big, news events, including the Fed meet on the 17th of September. How are you calling the markets right now?
I think we can expect to see a similar sense of volatility. Certainly there are still many in the September camp expecting to see a rate hike, albeit that it might be quite a small one with a very gradual look to the future. I don't think it will actually happen. I think the volatility we've seen, and of course the lack of inflation, will probably prevent the Federal Reserve from hiking just yet, but they may very well make inroads into doing so before the end of the year. The question is about liquidity and whether they'll have the right amount of liquidity to make such a change to the market, even if it's not expected to be a big deal. I think the markets are going to probably overreact, as they are wont to do for the last while. But despite the fact that we have seen the PBOC intervene in the stock market and, of course, add liquidity to the cuts in the RRR rate, it's going to take a little while for these effects to show in the manufacturing sector. So it is losing momentum. And, of course, that is feeding into the futures as well. The Dow is looking to open about 300 points lower. And, of course, European purses around 2.5% down across the board as well. But again, it is the basic resource sector that seems to be very much creating the problem. And of course, with oil prices being so volatile, it's very hard to call a direction in oil prices at the moment, particularly when the dollar seems to be very much, on the cusp of whether or not we're going to see an interest rate hike or not. So until we get a little bit of clarity from the Federal Reserve, I think we can expect this to continue. But even after the next Fed meeting, there will still be the prospect of a rate hike in the near term. So I do feel that the bull market might be coming to an end.
Right, Brenda, thanks so much for that. Let's get Mayuresh and Abhijit to give a closing comment on what's happening. Now the Sensex is down 543 points. Mayuresh, this bout of selling has come as a bit of a surprise because yesterday the markets were fairly quiet. I'm going to ask you how you see it moving ahead and what are the immediate risks in the market right now?
So clearly, I think the softness might continue because I think we will follow the global trend in the short to intermittent time period. And clearly, I think the global cues are not supportive on any parameter at this point of time. So the softness would continue for Indian markets. We are not decoupled in the sense of how global trade will pan out. And if global demand tapers off, we will see our share of exports going down proportionately as well. Saying that as well, I think the core data itself yesterday was pretty weak. And clearly, if you look at the kind of government spending that has come through, I think we expect those benefits to start coming in the second half of this fiscal. So I think one really needs to understand that commodity prices have also corrected meaningfully. That should also aid corporate earnings in the second half. But that is all domestically driven. So at this point of time, at least from a short-term perspective, we will be ruled on how the global markets react, and we will react accordingly.
Right, and of course this comes on the back of our own downgrades, both in terms of GDP and market levels. So it's not looking like a pretty picture. It's really the core growth story is being questioned in China, in India, in the US and elsewhere. Abhijit, last word from you. What are the immediate support levels, the two levels that we should be watching out for as market watchers?
So from a very short-term point of view, for the Nifty spot, 8091 was the current swing high that the index made. So as long as that is not taken out on the upside, selling is very much likely to persist. As I said, that this entire street would be looking at close to that previous swing low, which was close to 7667. And these are panic lows in the market, and they don't last long when they are hit. But the sense is that's the immediate low that the market is looking at. 77.50 is the level below which, if it comes, looking very close to that right now. If it breaks that and stays below that for the better half of this week, there can be further more selling to come for the rest of this week.
Right, Abhijit, Mayuresh, we leave it over here. 200 points down on the Nifty this week itself. So it's not looking like a pretty picture at all. Of course, all eyes on the global markets because a lot of the stress is emanating from that. We head into a short break. We'll come back and pick up the market sell-off on the other side and also get your full commentary on that. Thanks for joining us. Goodbye.